All right. Today is Wednesday, the 24th of January. This is a recap for the stock market activities today. And folks, I got a good one for you tonight. And let's start by this. I apologize. Last night I made a mistake. I thought it was Thursday. I mixed up the days. So I gave you the outlook for Thursday. It was a long day to say the least. I was up since 4 o'clock in the morning and did not finish working till 9. So I apologize for that. But today is Wednesday. Tomorrow is Thursday. And folks, we have a lot to talk about here. Busy. It's earnings season. So let's get right into it already. You know, this year it's all about the battle of expectations. The market heading into 24 ran it significantly higher with expectations that central banks would begin cutting rates. And that will be good for the economy because so far we haven't seen a recession. So we're going to have a soft landing and everybody's going to live happily ever after. So far, it appears that it's not going to happen this way. Sure, stocks are doing their own thing right now, and I'll show you in a minute here. The massive divergences, not just in this market, but worldwide. Today, we got the chief of the Bank of Canada. He comes out and says, yeah, it's premature to talk about interest rate cuts. Madame Lagarde says the same. The Fed zombies here. They talk about the same thing. Premature. Even Mary Daly from San Francisco, she said premature. Then why the hell did you even put this idea in the market's head last December? You see the manipulation here by the Federal Reserve? We don't have a free market anymore. Not just here, everywhere. Markets are being manipulated by central banks. And on top of that, they're doing insider trading. This is the biggest scandal in history. We're talking about trillions of dollars here. And by the way, the watchdog came out yesterday and said that the Federal Reserve insider trading scandal is a big deal and cannot be ignored. Many violations happened and never been corrected. Nobody has been held responsible. It's unbelievable. The level of corruption here is just unbearable. But anyways, I'll show you here what's going on. If you look at the UK market, the gilts, the bond market over there, just like us, rallied in December in expectations of rate cuts. So far this year, it pretty much gave up the entirety of the gain since the month of December. So we have a reversion here. We have a reversal in expectations, but the markets are not really getting the memo. If we look at the gilts here, the UK government bond 10-year yield rallying higher since 24 non-stop. Now plug in the FTSE. It has been tracking bond yields until recently. It decides to rally along with bond yields. So there was a little bit of divergence here. Then you look at the German Bunds, 10-year. That's been rallying since the beginning of the year. Now plug in the DAX. That's in a different world entirely. So it goes up when the 10-year goes down, and then the 10-year rebounds, and the DAX says, yeah, I don't care. I'm just going to go higher here. In the US, the S&P 500 versus TLT. Again, massive divergence here. Something bad is about to happen. It's not about liquidity either. SPX versus HYG, which is the proxy for liquidity. That's not rallying as of late. What's going on here? Are we about to have a wake-up call here, a flash crash of sorts? Not just here, but globally, with all of these insane divergences that we see. I mean, it's all in the hands of the Fed right now. The ECB, the Bank of England, the Bank of Canada, Bank of Australia, all looking at the Fed. And if the Fed confirms, folks, there are no rate cuts coming, what would be the reaction here? And the Fed knows that it could be a massive oversized reaction to the downside, not just here, but globally. And now they have to massage how they send the signal to be as gentle as they can. Why the manipulation to begin with? Why did you come out in December and set the market expectations so high in anticipation of rate cuts by the month of March? And now you want to fix it, and you want to fix it amicably? It's insane. But that's the market that we're in. Manipulation by central banks, and God knows what they're doing behind the scenes here. Anyhow, let's go to the morning brief because we have a lot to talk about here. You can pause this and read it if you'd like, but the conclusion is we were looking at what's going on in the British pound overnight, rallying higher as the data came out hot. And the US dollar was down big. And we were looking for a gap fill in the 4 hours chart, but the 1 hour chart for the dollar was also really oversold. So my anticipation was after the European close, we might see the dollar rallying higher in an oversold rebound. And that might pull the market down, but again, the messages are so confusing. I'd rather be on the sidelines today, with exception of buying the USO and maybe buying the dip in some energy names, and also taking a short trade in Apple. So let's look at some of these charts here. USO, this is what I was looking at, that we have a sloping line of resistance. If you pass above, we're probably heading to 71.10. And here's the update. We're above. We retested the line again, and USO is moving higher. Of course, as the market close was looming, it got the news that the Houthis in the Red Sea attacked a U.S. ship. Then the Pentagon came out and said that's not true, so who knows what the hell is going on over there. But it's not good. So my hunch is USO will continue to move higher here. And by the way, the energy sector was on top today, beating comm services and technology. Even though the dollar actually moved higher, it didn't really fill the gap below. It kept moving higher, but energy kept going higher too. And I told you yesterday that energy is kind of ignoring the dollar for a little bit here. Energy is singing on its own tune. So the dollar is not the best correlation that we see with the energy and oil stocks right now. And then if we look at Apple, an hourly chart, what do we see here? We have an upward line of resistance that's holding, and now we're looking at 193.83 to get that short trade here, to unlock more downside. So maybe it didn't happen today, but tomorrow it could be the case, and we have the trade going all the way down and closing the gap at, let's say, 192-ish. So we'll keep an eye on it tomorrow. Then we have a lot of earnings that we got today. AT&T, Abbott Laboratories, ServiceNow, Tesla, and IBM. Let's see some of these reactions here. AT&T was down about 3%, and then Abbott Laboratories was down about 3%, but it wasn't because of earnings or sales. Those numbers were pretty good. I think the stock was technically overbought, and that's the problem here. Now, we'll cover Abbott in my portfolio review because I own the stock, so we'll do that then. We also got ServiceNow. Stock is down about 1% or so we'll look at that report in a minute. But then we have the big one, Tesla, down about 6% after the bell. Initially, the reaction was kind of tame, down about 2 to 3%. But then the call came out, and Elon Musk was not sounding pretty good. And I mean, even the CFO, he just doesn't, the numbers don't look good here for Tesla. So we've seen more selling, and we'll look at the numbers in a minute here. Then, of course, we got Dinosaur, IBM. That's the hot stock right now, up about 8%. It's about to reach the all-time highs from about a decade ago. That's the OG of AI. So we'll look at that report in a minute. But we begin with ServiceNow. You know, it's the company that I used to work for, and I know it's the best of breed in software. And they're really, really careful and really, really good in staying ahead of the numbers here, keeping really good margins. So you look at total revenues. Year on year, up 25.61%. Really decent growth here. Cost of revenues, up about 24.33%. So the rate of growth in revenues exceeds the rate of growth in costs. And then you got expenses. That's up about 20.5%. So still below the growth rate in revenues. So far, so good. Let's do the operating margins. 11% versus 8% last year. So far, so good. It's no surprising here that the bottom line, the net income, is up about 97% year on year. Impressive. As good as it gets here. So why is the stock down? I think it's so overvalued right now. It's already accounting for all of these good results. And then some, meaning that the bar was way too high. And then we look at Tesla here, and the accounting in Tesla is just all over the place. You wonder what they're hiding, really. But anyways, we look at revenues up 3% year on year. This is really one of the weakest growth in revenues that we've seen in Tesla's history. So the company's maturing and slowing down. Now, they don't give us the cost of goods sold, but they give us the gross profit. So we can use that to get to the cost of goods sold, and it's up about 12% here. So we got a problem here, the opposite of ServiceNow, where you have the rate of growth in revenues way below the rate of growth in costs. Then you look at expenses, up 27% year on year. So the margins are not going to be good here. The operating margin, 8.2%. Again, by the way, it's a really good operating margin for an automobile manufacturer. You're not going to see that in Ford or GM. I mean, GM right now having a little bit of a good time, but usually you don't see 8.2%. That's down from 16% last year. So this is not the same company that it was just a year ago. It's not the growth story that we've been accustomed to. Then you do the bottom line, and I don't know how they got to this accounting. They say they're up 115% year on year. Give me a break. I mean, just do the math right in front of you here. They're probably using some taxes, deferred taxes, so funny accounting is going on here in Tesla. But if you look at the actual net income, the growth is negative, almost 40% year on year. So, I mean, it's just not good, folks. The margins are not good. And the company comes out and says, yeah, it's not going to get better anytime soon. We see the volume of sales down for the company this year. So again, Tesla is not the same company it used to be. It used to be a growth company in 2020, even 2019, 2018, into 22, growth company. So we can increase the premium. We can increase the valuations all we want. Add to that, of course, the cult mentality and the mania, and you get a really decent premium on the stock. But you stop the growth story. Okay, now we want to look for margins. Give us some good margins. Then we can keep the stock higher. If you fail at both growth and margins, we got a problem here. We can't justify the valuations. So the stock goes down, and I think that it could get really ugly here for Tesla. It's oversold, so we might get an oversold relief rebound. But boy, it's just, they got a big problem here. So we've done some trades. I gave you some ideas, trades for Tesla, a neutral strategy, bearish strategy, bullish strategy. You pick your pick here, whatever you'd like. You could pause and read this, but let's give you an update on all of these strategies. So the inverse iron condor strategy, which is a neutral strategy, if the stock opens at 195 tomorrow or below, the trade is going to be profitable here, as you can see. If you pick the longer expiration, not only the trade will be profitable, but you'll have more time for it to work. And your maximum profit is at $10, so it's not a bad risk versus reward. Now, if you went with the calendar spread instead, I think it's still going to be good because we picked February 2nd and we sold 26. So again, if we wake up tomorrow and we're at 195, 193, the trade will be profitable. And of course, as the contract of the 185 puts expire out of the money by Friday, then you're going to have the 185 for next week, and that's going to appreciate in value. You can make over 100% worth of profits here. If you took the bearish trade, the long put butterfly, that's also going to be profitable tomorrow, assuming we open at 195, 193. You're going to make probably a double here, a 100% plus worth of gains if we open as I see right now in the post market, because you have all the way till 180 before the butterfly kicks in. So that's a big gap. But you got to be careful here. If you see Tesla gapping down 195 and then we see dip buying, you better close this trade really fast here. And you can actually, what you can do is you sell the 190 and then you turn it into a credit spread by buying another contract of the 170 puts. You actually want to do that first before your broker allows you to sell the 190. And it's kind of hard to see that Tesla will be below 180 by Friday. So it's going to require management here in the morning. If you went with the bullish strategy, the long call butterfly, well, unfortunately for you, there's nothing we can do here. Unless if there is a big rebound tomorrow. Then we can talk about it. So anyhow, these are the trades that we've done for Tesla. What about Dinosaur IBM? Way hotter than Tesla. I mean, look at this. The revenue is up 4%. Then you look at, if you look at cost of goods sold, that's up marginally. It's just less than 1%. If you look at expenses, up 3%. So again, growth in revenues, exceeding the growth in expenses. All in all, the net income is an impressive up 21.28% year on year. So IBM is having a party here. The OG of AI, by the way. But look at this. When people say, oh, to time in the market is better than timing the market. What the hell are you talking about? So IBM topped in the dot-com bubble. And it took about a decade before it got a recovery. And then it topped again in 2013. And it appears that it's going to take about more than a decade now before we get to the highs again. So the open will be 188. Now it becomes the psychological goal to go back to the highs and exceed 200. So it's probably going to be an easy trade here, maybe initial pullback, but they're going to get the high here. That's going to be the goal. And after that, we can talk about double top, but it took about over a decade for IBM to recover. The moral of the story is if you bought Tesla at the top, or maybe at these levels right now, if Tesla indeed becomes a maturing company, you might not see these levels for years to come. So the lesson for the new generation of investors, look at IBM. Used to be the hottest stock in the world back then, by the way. Nobody thought that IBM will go down, ever go down. But it became a maturing company and the rest is history. So Tesla will face the same thing. Even the big camps will face the same thing. Their growth, the heydays of zero interest rates and insane growth, that's probably going to stop, not to mention the deficit and taxation, upcoming taxation for these companies. So they will also reach a maturing status. And you might not see those highs for years to come. Anyhow, let's expand the conversation here and cover the market information. We begin with the closing of the indices today, and here we go. The diamonds down by 99.06 points, or a loss of 0.26%. The Nasdaq in the green by 55.97 points, or a gain of 0.36%. Spider almost flattish, beat in the green, up by 3.95 points, or a gain of 0.08%. The Russell 2000 IWM, the laggard again, as we see interest rates moving higher after the auction. The 5-year auction was abysmal today, and I think that we have another auction coming out tomorrow, the 7-year. Oh, that could add more pressure here. So we see the Russell 2000 down by 1.61 points, or a loss of 0.08%. 0.82%. Sectors, as we said, energy on top, followed by comm services. Thank you, Netflix, of course. And then you have technology, the chip names in mania. Lots of assumptions being built on these chips right now. We're going to get AMD next week, and then after that, NVIDIA. If they don't deliver, then we got a problem. We could see a massive correction here. But then again, you look at ASML earnings, for example, they were good, but then we have China concerns. China's hoarding chips right now, so that's good for them. But at some point, that's going to stop being a tailwind. What if the big caps stop ramping up spending because their margins going to be in question now? Something you got to think about. Now, look, I warned the bears and actually I begged the bears not to short chips last year. I said, look, you can't. There's a point in time. There's going to be a massive correction, but there's a point and time for that. And then you look at the laggards, all interest rate sensitive, utilities, real estate, defensives, healthcare, all down. I mean, you look at the utilities and real estate, maybe that's the sector you want to concentrate your shorts on, not chips for now, but that's coming later. You look at the breadth, not pretty good here. NYSE, 34% advancing versus 64% declining. The NASDAQ, 39% advancing versus 58% declining. If we look at commodities, the dollar was down a tick, so we've seen mixed reactions in metals, for example. The most conservative is the old man gold, and gold says, yeah, I don't care about the dip in the dollar. That was because of the pound. Overnight, you see the Swiss franc is also up. You see the Japanese yen up, so maybe that's related to that, but the dollar is still bullish, at least the formation that we see right now. So gold is skeptical about the dip in the US dollar. But the higher beta metals here, silver, copper, palladium, moved higher based on the dollar going down. And then we look at energy, you see crude oil up a little over 1.25%, Brent up about 1%. And again, if we have more skirmishes in the Red Sea, you'll see it up more. The RBOB caught a rebound here, less than half a percentage point worth of gains. We need to see a little more to help the refiners. Heating oil flattish for the day, and then nat gas, I promise you, was not up by 30% for the day. I think the contract was updated to the March contract. Contracts were up, but not by 29 or 30%. Now we look at softs. Cocoa remains hot, up about 3.5% today alone. At some point, maybe 5,000 is the mental goal here for commodities traders because, this has been. Forget about AI. Look at the chart of cocoa. That's out of whack. But again, shortages, the conditions for exports are not really that good. We rely on Africa for that, few countries in Africa, and if we have problems over there, forget about the supply of chocolate. And then we look at sugar, up about 3% for the day. Marginal gains for cotton, OJ, lumber down a tick, and coffee, giving up some gains here, down about 2%. Of course, we have Starbucks earnings coming out, and coffee futures been rallying as of late, so the problem with Starbucks is coffee futures going higher increases their cost, but they can usually pass that to the consumer. If they can't, though, if they lose their pricing power, then we have a major problem with the stock. Meats, flattish, but lean hogs on fire, up yet again by about 2.25%. We see rebounds in grains for wheat and corn. Wheat beginning to find some footing here, up 2.5%. So it'll be really interesting to see if we have a follow-up. If it is, then probably wheat is up to the races here. But we see pullbacks for soybean oil down about 2%, and oats, again, giving up some of the gains, down about 1.25%. Moving on to the big casino options market, what do we see here? The volume came back a tick, just a little bit, but it remains shy for the most part. NVIDIA, again, they keep piling in, buying these calls. And folks, we talked about this before the year even began. We said that, look, the technical setup for NVIDIA, I'm the biggest bear in NVIDIA. I think that it is one of the most overvalued stocks in history because the pricing power is not sustainable. But the technicals look pretty good, and it's going to break out, and it did in a big way. We also talked about the IV rank. It was almost at zero. Okay, so the options for NVIDIA were really, really cheap. So if you took advantage of that, congratulations. But now the IV rank is again at 36, 37. So options are beginning to get really, really expensive yet again. At some point it stops. Of course, when the options become really, really expensive, it becomes harder to just keep rolling and playing these calls. We see folks switching to the puts. Stock gets a correction. Tesla at number 2, about 1.9 million contracts traded today, mostly for calls. Not looking good so far. AMD remains hot again, but boy, just the excess doesn't look good here. Lots of assumptions, and the name is going to report earnings next week. So if you own the name, you got to have some hedging strategy here. And the easiest hedging strategy is to book profits, but if you don't want to do that, at least sell some covered calls, to finance some puts, do something here. The other thing I want to show you is the phenomenon of zero DTEs, which has been exploding since December and accelerating in the month of January. We see a lot of calls, zero DTEs, and maybe that's why we're seeing the divergence that we see in markets right now, where the indices are going higher in defiance with junk bonds, in defiance with the bond market, in defiance with the dollar. Maybe zero DTEs are accelerating the gains here and opening a gap and causing these divergences. So something is wrong with the mechanics of the market here. Let's do the unusual activities that took place in the options market today. We begin with the ticker NFLX Netflix. The name is up big today, but if you look at the chart, maybe we got an island reversal, so we'll look at that in a minute. We talked about how the company sacrificed profitability for growth. And under higher yields, the market doesn't really care about growth. The market cares about profitability. So if yields keep going higher, I think Netflix will fade some of these gains that we've seen today. In any case, we have a trader here who disagrees and bought the 590 calls for the expiration date next week, February 2nd. The expectations, Netflix will add more to the gains by the tune of 8% or more. Paid about $1.15 a piece to enter this trade, all in all spending about $2 million. Now understand, every trade has a buyer and a seller. So maybe the trader here is somebody who owns Netflix and they're selling these covered calls at $5.90. But usually the initiation of the trade happens by the buyer's side. So this is why we say somebody bought, okay? But somebody buys, somebody's selling that buyer. Somebody who owns the stock is writing covered calls. Next one, we have GOOGL, Alphabet. Somebody sees the name going higher, and they bought the 157.5 calls for the expiration date next Friday, the 2nd of February, with expectations that the name will go higher and gain more than 6% by then. Paid about $1.20 a piece to enter this trade, spending about $1.5 million. And then we have the XBI Biotech ETF. Somebody's fading here, betting for more losses to come, maybe as yields go higher. XBI is full of profitless companies. So they bought the 83 puts for the expiration date March 15th. The expectations, the name will go down and lose more than 5% of its value by then. Paid about $2 a piece to enter this trade, all in all spending about $2 million. And then we have some trades for Tesla here. You can see it for yourself. We have a put trade that's probably going to be rewarded. We have a call trade at the bottom. Unfortunately, that's not going to work out. But we do have UPST here, Upstart's holding. Interesting name, really volatile. It thrives when the TLT goes up. Somebody's bidding to the upside either way. They bought the 37 calls for the expiration date next week, February 2nd. The expectations, the name will go higher and gain more than 10% by then. Paid about $1 a piece to enter this trade, all in all spending about $850,000. Heat map, what do we see here? You can see that the market all in all is doing awful here. Healthcare is being sold, industrials, real estate, utilities, metals, defensive, cyclicals, even the comm services are down, exception of the big cap and Netflix. You see even software names are down. Most of them. Cybersecurity even down today because yields are going higher. But we see two corners of the market here that are defying all of this and fighting all of this. Corner number one is the AI mania, whether we're talking about the big caps, but mostly chips. But even in chips, you see divergences here. Texas down, analog devices down. Then you have AMAT, ASML, AMD, NVIDIA, Taiwan, Broadcom up. So mostly the AI mania leading chip gains here. But the divergences, boy, it's just notable here. And regional banks, of course, is the other sector that is fighting yields going higher. Now, we've noticed in the past that when yields go higher, we see energy going higher too. So it was part of the reason why I was kind of buying the dip in energy here, not just because the dollar went down, but mostly because yields are recovering and moving higher. So you see Exxon, Chevron, SLB, all of these names gained today. And I think if yields continue to go higher, we could see more gains for energy from this point on. The other notable mention is Pinduoduo, Alibaba, GD, all of the Chinese names. Now, they moved higher yesterday and they added to the gains today. But I think that we're going to run out of stimulus optimism at some point if it doesn't happen. I mean, the Chinese government's talking about different measures such as banning shorting, banks lifting up the yuan. But last resort would be pumping in stimulus. I told you why. Xi Jinping doesn't want to have the appearance that a communist country is behaving the same way as the evil empire of the United States, the capitalists, right? Where they just rescue the stock market all the time. He wants to preserve the appearance that the Chinese government cares about the people, not the stock market and the rich. But how long can you just endure the pain here. So they're going to try. They're going to try to avoid that. They're going to do lifting the yuan, and they're going to do maybe interest rate cuts after that if that, shoring the yuan doesn't work out. The last resort will be pumping in stimulus. I'd be careful with these trades just because of how many false hopes we've gotten throughout the month and the years, really. They move higher. We think, oh, Chinese equity is now going to move higher. Then they fade right away. And on top of that, folks, Jim Cramer came out today and said maybe he sees Chinese equities moving higher because of stimulus. So you should have booked the gains today. That's just my call. Look at the heat map for the day for the ETFs again. The dollar down a tick. So you see Chinese equities right now defying that, FXI, MCHI. But I'll be really, really careful that if the dollar goes higher again tomorrow, we could have a sharp pullback here. We give up a lot of the gains. With yields going higher, as you can see the TLT going down, yield-sensitive ETFs such as small caps, mid caps, they tend to underperform. So we see the IWM as the laggard of the day. Then you look at any yield-sensitive ETF, be it XLP Staples, XLU Utilities, IYR Real Estate, and now joining the party to the downside, the XHB Home Builders after the disaster from DR Horton, then XPI Biotech, all going down. What is the outlier? KRE Regional Banks. That continues to fight here because we have a bunch of hedge funds who think that, picking up regional banks is the trade of the year. Wrong call. The majority of problems in the economy right now revolve around regional banks. And we have the sulfur facility by the Fed. That's going to be shut down, at least according to Powell, by the month of March. What happens then? They continue to borrow, even as close as today. They continue to borrow from the facility. So they got problems here. They're addicted to the facility and they can't pay back. What's going to happen here? Extending the facility? Perhaps. Maybe that's what folks are betting on. Then, of course, we talked about the dollar going down a tick. But, of course, gold miners, GDX, GLD kind of sniffed that the dollar has a lot of strength here and they went down. Only defiance was coming from the SLV side, up a little bit, but I don't think that's going to last with GLD and GDX gold going down. Hottest sector, of course, chips, SMH, SOXX. That's the only corner that is really working consistently. And today was a decent day for the XLE, XOP, OIH energy, and even the commodity USO did pretty good. Natural gas, good rebound. So we see in UNG, and BOIL doing pretty good. I think that energy might find a footing here and assume leadership of the market. That's my assumption for now. It's just a 1 day worth of action. So we need to see a follow-up to be comfortable in that call. Let's do some charts here and wrap it up. We begin with SPY, the S&P 500, an hourly chart. What do we see here? Gap and crap of some sort. So we got a gap higher, closed the gap below almost, closed negative here. Support 485.22. We lose that, we got 482.72. And then, of course, 480. So one step at a time here in the bets. You need one confirmation at a time. Any sign from today's action of a reversal? No. Topping? Sure. Confirmation needed to say, okay, we got a reversal. We lose 482.72. We got the confirmation, and then even more of a confirmation losing 480. I would not wait till 480 is lost to get a put trade here. Losing 485 will be good enough for me to take me down to 483 or 482 in the puts. If we lose 482.72, then I'll aim for the 480, 475 put spread. Of course, we'll talk about that on Discord. You look at the daily chart for the SPY outside of the Bollinger Bands, and again, maybe forming a rising wedge here. RSI is really overbought, so it's just a matter of time here before we see a sharp pullback and a correction in the SPY. You look at the E-mini futures, same look, maybe topping candle, but we need, so you can call it a evening star or whatever, doesn't matter. The terminology doesn't matter. It's a reversal candle, but it needs confirmation. If we get it, it could be a beginning process of de-risking ahead of the PC inflation rate, and of course the FOMC coming out next week. Look at the Q's hourly chart. We have what appears to be gap and crap, kinda. Did not really go negative, but again, closing at the lows of the day. We have support at 424.73. Look at the hour size, just got out of whack. The computers, the algos, will begin to sell based on that alone. So it was just too much. Can we assume, though, that we do have a reversal here? Answer is no. For all you know, we can rebound higher tomorrow, based on chips again. NVIDIA, same names. Lather, rinse, repeat. We need to see more. You look at the daily chart. What do we see here? Reversal candle, hammer. Sure. Outside of the bands? Sure. Out of whack RSI? Sure. Volume moving higher on the selling side? Got it. But we need to see more here, folks. Of course, the divergence from the 20 days moving average is notable. So if we do have a correction here, a sharp one, it should take us at least to the 20 days moving average. But again, in my thinking, given the fact what's going on in the bond market and rate cut expectations, I think it only makes sense to erase the entirety of the gains since December 13. And then we can talk about what happens after that. Do you begin betting on that today? I mean, you look at the NASDAQ futures, got a topping candle, but without confirmation. Hard to time it here. But I think that after what we've seen so far in the market behavior, as the dips keep getting bought in an insane way, every time you get a reversal sign, the plunger shows up. And then we see gaps higher in a mysterious way. So you have to be as conservative as you can, betting on a correction here. So we need to see losses here. We need to see a loss of the trend line. We need to go down at least to 17,210 to get at least some level of comfort that yes, we are in that process now. What has been technically sound, unlike the SPY and the Qs, is the small caps IWM. It's been tracking the bond market. So yesterday we talked about the hourly chart of the IWM, that we have a bullish outlook. We talked about the bearish, the bear flag, and the head and shoulder. We also have a bullish outlook, which is inverse head and shoulder. Confirmation, cracking above the highs from yesterday. We tried today. It didn't happen. Immediately, the dollar had been rallying since the open, and bond yields just kept going higher after the 5-year auction. We lost 196. So what do we do now? Confirmation for a reversal and more downside would be losing 193. And most importantly, closing below 193. Of course, do you wait till the closing happens? I think if you lose 193 from, let's say, 15 to 30 minutes perspective, I think that will be enough for me to say, okay, I see what's going on here. But right now, it's inconclusive because you look at the daily chart. We lost the 20, sure. The MACD is still negative. RSI trending negative. But look at the vortex. It still leans toward the bullish momentum being restored. So you got to take that into account and have as much confirmation as you can before taking that reversal trade. So I say that losing 193 and closing below should be the confirmation that no, we have more losses to come here before we find the bottom in the IWM. We look at the dollar. What do we see here? Here's the hourly chart. In the stream today, we identified the inverse head and shoulder reversal. So you see the drop, the flush down overnight. That's because the British pound went higher after we got data from the UK. Then the US market opened and the dollar was really oversold. So we got, as you can see in the RSI right here. So we got a rebound. Then the European market closed. So no pressure from the pound or the euro. And you see the dollar recovering and recapturing the trend line. That is a sign of strength. That is a sign that the dollar is not ready to give up. It didn't even go down to fill the gap. So you have to take that into account. You look at the dollar daily chart, the 200 has been like a magnet here, pulling the chart up, but it is stiff resistance. So I think if we break above the 200, it's going to be an explosive move. All of the energy will be released at once. And that's the moment when the market shits its pants. So grab the diapers, because if the PCE gives us that break, I don't think the market can hold anymore. You look at the old man gold. It's looking at the dollar and saying, look, that guy wants to go higher. So I retested the 20 moving average 2 times now. Not happening. I think I want to expand the lower Bollinger Bands to the downside. Maybe go down to 1962-ish and retest that as support, depending on a breakout from the dollar. But gold right now is positioning for a breakout in the dollar. You look at gold miners GDX, gap and crap in a big way. And this is why, look, if you got into the GDX trade that we put in the weekly strategy, you gotta book when you see a big pump in the morning like this, a big gap higher, and you have weekly expirations. You know that the contract was trading at above $1 a pop? We bought it for what, 35 cents a piece? Come on, you made over 200% worth of gains. Gotta book the profits, because then comes the crap, and goodbye. That's a reversal here. You look at the SLV, same thing. Not as significant or strong as the GDX, but the message is clear. Got an oversold rebound, but now the dollar is just too strong for comfort. Then you look at UK oil. Look at the behavior of this chart. Look at how the Bollinger Bands are leaning. They're expanding to the upside. We're getting a little outside of that triangular consolidation pattern. I'm leaning toward the bullish side here for energy. But we need that big breakout. We need to get outside of this range comfortably. We need to be back at 85 to say, okay, Mr. Powell, you got it wrong, and the prices of oil will poke your eyes out if you cut rates right now. You look at the XLE, got a sloping line of resistance here, and we have a pattern of lower lows. If that is reversed and we have a higher low, then the probability would be breaking above the sloping line of resistance. So we see the XLE now getting some energy in it. We have some earnings coming out really soon. I think we have Valero tomorrow, and then we have Exxon on Friday. In any case, I think right now as bond yields recover, we're probably going to see, combine that with the geopolitics. I think we're going to see energy recovering a little bit here and maybe resuming leadership. But the short covering is not going to kick in until we go to the 85-ish level and we see crude oil prices going back also to the 85-ish level on the Brent, and then the shorts will begin to scramble to cover. You look at the 10-year yield. 200 has been support over and over and over and over again. We look at the 50. We're now above the 50. Okay, so that's significant. Broke above the 20. Broke above the 200. Broke above the 50. That's strength. Yields are showing strength. Next stop is 4.2. If we get above that, then we're up to the races here. And the market cannot ignore it anymore. So you look at the XHP. Now the memo is showing up. We see loss of the 20. Love to see loss of 91.45 as a confirmation. But DR Horton was a warning sign that these stocks went way too high, too fast because of yields going down. But the fundamentals of these companies are not really that healthy. Then you look at the IYR. We lost the 50 today. So what's being in play here? How about an inverse ABC pattern? If yields move higher again tomorrow, you could see IYR flushing down big. We have plenty of gaps below here that we could fill, but one step at a time. KRE, that's the one that's defying the correlation, so it's above the 20 for now. Plug in the TLT. One of these two guys is wrong, and I don't think it's going to be the TLT. So if that is the case, it's just a matter of time before we see a failure in the KRE and we see a flush down to catch up with the TLT here. VIX got really oversold, 4 hours below the gap, and then came demand. After the auction, the 5-year, which was abysmal, was one of the worst I've seen. We're back to the same problem, folks. Are you paying attention or not? Folks are not buying our bonds. They don't want it anymore. We have to offer higher rates, whether Powell likes it or not. So we see rates going higher and folks now showing up with some demand in the VIX. Here's Apple daily chart. What do we do here? We got to the top of the pattern. It appears as a reversal candle, but we're awaiting confirmation of the loss of 193.83. Then let's take a shot at it here and go with the 190-185 spread for now. We can expand that later on. Souffle Tesla, what do we do here? You know, the stock is gapping after hours at the 195-ish level here. So we look at the weekly chart. We're below the 20 weekly average, below the 200 weekly average. Got a retest today, did not work out. We do have support here at 194. I'm inclined to say, because the daily chart is really oversold, I'm inclined to say that if Tesla opens 195, 194.5, anywhere above 194, it could find support, and we see dip buying in the morning just because it's really oversold. But if it opens below 194 or it loses 194 right away, then I think we have a flush down here. The weekly chart will take place. Forget about the oversold in the daily. That's going to become even more oversold because we'll see capitulation by the holders saying, okay, this is not the stock that it used to be. I'm dumping. I'm out. I got a viewer in the stream today who said, look, I've been investing in Tesla for years, made a lot of profits, but I decided to sell my shares today. I said, look, you made profits. That's what investors are supposed to do. You ride the ride. When it stops being fruitful, you take your profits and you go to another hotter trade here. And Tesla is not hot as it used to be anymore. Nvidia, that's the hot for now. It just keeps going and going and going. The dip's being bought over and over and over again. When is it way too hot? I mean, the hour size is just insane. The Bollinger Band's out of whack. The divergence from the 20 days moving average out of whack. Even the weekly chart is out of whack. But we gotta see a reversal pattern here, folks. Now, the counter to what I'm saying is, but Maverick, when the reversal happens, it's gonna be so big that if you try to chase it, the volatility will be high. You're gonna overpay for the puts, so you have to do it beforehand. I would say, okay, if you want to play that game, play that game. But understand that how many times you're going to be wrong before you get it right. Maybe you'll be lucky with the timing. But so far, look at how many attempts for a pullback that failed because of dip buying. So if you think that your timing is pretty good, take a shot at it. Buy the puts. You can go with the 600, 550 spread. You can go with the 550 right away for February expiration. You can do that. You might get rewarded here by a big drop. But boy, your timing has to be impeccable. Meaning that if you see the stock going higher the next day after you initiate the trade, you probably want to cut your losses right away and try again later. For me, I think I'm going to get, at least from an intraday signal, I'm going to get a signal that we're reversing now. It might be wrong. It might happen overnight tomorrow, but I think I'm going to get a signal here and we'll get a reversal trade on NVIDIA. Same goes for AMD at the highs right now. Can we do anything here? RSI is way overbought. I would say I own shares of AMD, so I did my strategy over the weekend. I'm happy to sell at 165. So I sold covered calls, bought some puts. I'm happy with that strategy. If you're eyeing a short on it, I gave you the confirmation, losing 164.46. Conversation goes again, what if, waiting for that, then we get a big gap overnight and we lose 164, we're trading at 160 already. Then I missed the trade, I missed the pullback. Okay, if that's your thinking, take a shot right now, but you gotta have longer expiration and you gotta be really dynamic. The moment you see the stock up again, assume it's gonna be a green day you close it and you try again later. If we look at Bitcoin tulips, what do we see here? Sure, bear flag, and it might play out, but for now we're seeing some demand at 40,000. Some folks are saying, no, we want to hold here, so they keep holding at 40,000. If there is capitulation, and there is a good case for that, as the dollar and bond yields go higher, risk on becomes attractive, and Bitcoin is a pulse on, at the end of the day, sentiment. If sentiment sours because the dollar and bond yields are going higher, we could see capitulation. Finally, somebody says, okay, I'm done here, book the profits, flush it down. And that's a possibility. It's a high possibility. So you need to see a recovery here. And by recovery, I mean closing above the last breakdown candle that you see in red here. If you do that, okay, then we're talking, we have probably more upside to come. But if we just consolidate here, then it's just a matter of time before somebody pulls the trigger and we see more downside to come. If that happens, you know, names like Mara, for example, would not look pretty. Today it tried to rally, it couldn't. So we still have a bear flag pattern. If it fails, I think sooner than later we'll be at 13.5, fill the gap, and then if that doesn't hold, then we have another round of selling coming. And you look at it all in all, maybe it was a pump and dump scheme here in anticipation of the ETF approval. You look at Coinbase. Again, attempt for a recovery and it failed right away. So now the threat becomes that, look, this inverse ABC could play out. If Bitcoin gives up 40,000 for good, I think we have an inverse ABC here on Coinbase. That could take us, by the way, all the way down to 100. So we could have a big trade here coming for Coinbase. And here comes the mystery of Netflix. What do we do with this guy here? Outside of the Bollinger Bands, giving us sort of a inverse hammerish, not a clean one, because a clean one would be red. This one is green, so it did not close below the low of the day. But again, it's excessive. The RSI is really overbought. And if we continue to go down from here, especially in a gap down overnight, it could be the case for an island reversal. And those are really strong and they stick for a long time. My take is, I'm not going to dismiss more gains to come for Netflix. We could moderate here, allow the Bollinger Bands to expand, and then add more, because the report was good. The company is growing again. Problem is, if yields go higher, the emphasis on expanding growth is not as important as the emphasis of expanding margins and profits. And the company decided to sacrifice profits and spend more in marketing to attract more subscribers. And that could go against them if yields indeed move higher and interest rates stick here. Then the market will say, yeah, I don't care about your growth in subscribers. Show me the bottom line. And we see indeed that this was a gap and crap. We go back within range again. Moving on to the conclusion of this video, what do we have on the economic calendar tomorrow? Let's make sure that tomorrow is indeed Thursday and not another day. It is Thursday. We have Q4 GDP, preliminary reading. We have initial jobless claims. Then we have durable goods, the trade balance, on top of advanced retail inventories and wholesale inventories. And then new home sales, that's always important as we watch the impact of lower mortgage rates on the real estate market. On the earnings calendar, we have Union Pacific, we have Intel, Visa, and PayPal. And I think we have Starbucks too and Valero. So we'll add those. If we get them, we'll add those. I think two important companies. Interesting option trades on Starbucks beforehand. If I see something interesting, I'll share that with you in Discord tomorrow. And until then, folks, thank you for being here. This is all I got for you. Thank you for listening. Thank you for watching. And we'll be back again tomorrow. Good night.
You even know what your EBITDA is?
My what?
Earnings before interest, taxes, depreciation, and amortization. Gives the true picture of a company's profitability.